Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone midday here, UTC. I hope you're all well. See a load of people in the comments already. So good morning, good morning, good morning. Who have we got on and say? Anik, Queen, Dean Sullivan, Craig Parker. Spot on, BC. Use your knowledge to nail a room short yesterday. Awesome, man. Awesome. All on you. All on you, my friend. Just some levels. You know, executing is one of the hardest parts in this game. And I will take that Yorkshire tea off your hand whenever you got it going. Marta, good afternoon. Dee and Menno, how are you doing, buddy? Good friend of mine on the stream today. So, guys, what are we looking at today? So, want to do some requests today. I thought, we get a lot of them on the stream. I'm usually waffling on for quite a while, so I thought we'd kind of put it up today and see how we're going on. Good morning, Leanne from Brighton. Got some tea on the go as well. Fantastic. You can all hear maybe. That's the old metal teapot under brew at the moment as we go. Victor, Sorin, hey everybody. And Nipar, good afternoon. Great to see so many of you on the stream today. Welcome, welcome, welcome. Obviously, a big shout out as well to everybody that is listening to this on recording. So, yeah, what we're going to look at today is just some chart requests. All right. So, I can see here from Dean. Can we take a look at EU, please? Yeah, sure. What EU, USD, Euro USD, Euro GBP. Yeah, let me have a note, bud, and we can absolutely take a look at that as well. Craig's in Brighton too, legends. So not too far away from me, guys. I'm more kind of over the east side of London, but love getting down to Brighton. It's just an awesome place full of just some of the best people you could ask for. Danny boy, how you doing, mate? It's only saying 25 past because of a work meeting. Let's get it done. Cool. Frank, good. Thank you, buddy. Yakuza, Trader ZA, hey BC, I'm good. Thank you, my friend. Great to see you all on the stream. So, Dan, just quickly, not showing any favoritism. I know you've not got long on the stream today, mate. Was there anything you particularly wanted us to look over? Because we can always start with that. We'll definitely make time to look at EU as well if anybody's got any particular pairs that they would like to take a look at. Let's just make this a little bit bigger. And why not? Yeah, until that comes in, Dan, if you let me know if there's anything you want to look at, mate, I will start. QNT, there we go. The boy, he's in. Right, let's have a look. What have we got? Have I even got it on here? QNT, no, let's type it in. Hang on. What have we got here? Let's take a look at this one, shall we? QNT. Awesome. So, let's take a look at what we've got. Let's kick this up starting on the weekly. Euro USD, no problem at all, mate. No problem. And then we've got one there from Goldmax as well to take a look at near. Awesome. Now, obviously, when you go on some of these charts, guys, crypto assets, you click on a weekly and there's not really much history there, right? But really quick recap, I'm typically looking for clean liquidity, highs and lows to be run via inefficiencies or fair value gaps. And that's what we're using as the basis of our analysis, right? We're starting on the higher time frame. Normally with crypto, we're favoring the daily. Okay, so to put that in perspective, if we're looking at the chart here, right, we can see obviously opening price here. Now, this doesn't mean it's necessarily the beginning of the life cycle of the asset. It just might be when it's been listed on the exchange. So there's obviously not a lot of historical, data on here at the moment, right? But what we can absolutely do is still look how price is moving, right? Obviously, we've been in this really strong move down here. For those of you that are aware, what I typically like to see on any time frame is liquidity taken. Yeah. So, for example, down here, this was a really interesting one, right? Because I don't actually think we ran this low. We came very close to it, but we ran this low here, right? Now, obviously, liquidity was taken on this run of the low here. And it was really interesting because these kind of set up as equal lows. So had this been run down here, that would have really, really grabbed my attention. However, obviously, we only trade what we can see. And so that is actually resting liquidity. The sweep happened here. Okay, and then typically what we're looking for the high that preceded the sweep. So the origin of the move, the high that sweeps the low, for that to be closed above then we look for some kind of retracement into this level here, which is when we'd be looking for our trade setup. So with that in mind, let's just really focus on recency here, guys, rather than so much of a kind of lesson around, not a lesson, but just an example of how I take the entries and that. Coinbase has a lot of history for QNT. Okay, well let's jump on that quickly then, because actually we want to get the most history that we can, right? So as a perpetual asset, maybe it's not listing it as a perp. We've got it here on. Yeah, okay. So if I'm trading this futures, what I'm going to do is trade this futures on a perpetual contract, right? Meaning that it's a futures-based contract. This one we can use for higher time frame TA. We can also use this, and this is a lot better, right? We can also use this if we're looking to take spot investments and that, right? But typically, if I'm trading futures, I want to be on a futures-based contract, all right? The Sorin, yeah, absolutely. A few more questions there. No, Nick, you absolutely get involved, mate. Just remind me as we go down, and we'll certainly cram as much as we can into the hour today. So now, if we're looking at this, right, then what we're saying to ourselves here is really simply, we can see, obviously, we've come down from the low, set this high, higher low. We broke structure to the upside here. Obviously, this is a weekly scale, guys, so we need to remember this takes a lot of time to play out. However, what is really of interest here, and again, we haven't seen any kind of sweep on lows down here, although I'd imagine we've drawn into orders in this area here, right? So let me show you the first two things that would stand out to me on this chart when I'm looking at this, right? Is the fair value gap here, right? Weekly. Let me know if there's any issues with seeing that, guys. I like to keep that quite light grey. And then in terms of this high volume candle here, right? I think this is probably what price has come down into here. We can see the equilibrium of it's been respected in terms of closes. What would have made this more valid? And again, typically look at these on the daily time frame, but with these kind of order blocks, ideally you want to see price come up and retest it to draw on that liquidity and then kind of move away. A lot of different teaching on order blocks. A lot of people interpret them in different ways, supply and demand. This is just basically how I view them. But what I'd be looking for is I'd be looking at this point saying, okay, price is drawing into this area, which is down here. This is our order block. So what we're saying is that there are obviously a considerable amount of orders in here. And in fact, in this whole move down here, then we've followed up with this impulse move higher. Okay. So this area here, we're saying, okay, well, two things. One, it gives a good place for people to sell. If they were short here, yeah, they want to sell their short orders back to the market. They want to find buyers lower down. This also represents a good spot for buyers, right? Because for buyers that want to buy in slightly cheaper, people that were smart enough to stay out of the FOMO of getting in too late into this move, which we can see, as often happens, is followed by a swing fail. Price comes up, convinces and draws a lot of traders into going long before reversing, closing underneath, and then searching for liquidity lower down. Now, when we see this kind of reversal move, there's two key things that I'm looking at. I'm saying to myself, if I was a big player up here, if I was a whale in institution, smart money, different concepts, the way that you hear them said, the best way to think about it is just institutions, banks, people with large bankrolls that aren't looking to jump on board with an existing trend, or might do, but humor me here, right? Now, if you could buy down here, yeah, and sell up here, you're obviously going to be a lot better off than kind of buying in here, or here on the way up, right? Because first of all, we've got to define our risk. Now, if we're a buyer in here, our risk really simply sits under here, right? This is the low, the swing low, price has then gone up from there. If this order block is valid, what we're saying to ourselves is, okay, when we see this retested, we don't really want to see that violated again, right? If you take a fib on these order blocks, quite often what you'll see down the line, right, is that the 50% of this Fibonacci is respected with these weekly closes. All right, let's remember that we have to obviously pay tribute to the time frame that we're trading on. It's no good saying like, oh, okay, we've just dipped into a monthly order block or a weekly order block and throwing yourself onto a 1 minute chart looking for the first higher low and jumping in, because you'll just get chopped to pieces. But context, right? So when we came into this order block here, we could take and be looking for some aggressive entries around here. This downside wick is very nice. Why is this downside wick very nice? Well, first of all, it does a couple of things, right? bearing in mind this is a weekly scale, guys, all right? So first of all, it sweeps the prior week's low. We get this swing fail when price closes back within here, right? Now, if we're now looking back to here as well, and we're saying, okay, well, what's been swept here? Well, that week's low and this week's low as well, all right? So all of a sudden in our storyboard, we're saying to ourselves, on a weekly scale, we've drawn into this order block, right, where we believe there to be orders. We've had a bullish reaction, right? We see price now close back above, this week's low. So from this day on, we're saying to ourselves, okay, if we're trading higher, then where is the draw on price, okay? So this daily close here, that's definitely a draw on price, as is this fair value gap above. And we don't know how much price is going to go into these fair value gaps. They can barely touch them before reversing. But what we can do is look at these areas and say to ourselves, okay, well, if that's what we're targeting, then what do we want to see? Well, we see the rejection here. We see the rejection here. Again, we'll look at these on lower time frames, right? Now, then this became the naked liquidity afterwards. Yeah, that's where we had resting stops and liquidity above. And what we're saying to ourselves is we see this pullback here and we see this week open start to trade down first of all, and then it expands higher, right? So then at that point, our first target becomes this line, which is the fair value gap full fill, meaning that we've now closed off that inefficiency. Weekly. Okay, and that's what we're looking for. So that's the story we're telling with price. So where are we now? All right, just a quick question here. Sorin, session indicator. Yeah, sure. There's a couple that I use actually that I'll show you. One of them is this ICT kill zones by the Tradinator. Seems like a really top person. Got the Terminator as their logo. You'll find them on TradingView. Just blow that up a bit bigger so you guys can see it. No affiliation with any of these guys. I'm trialing a few of these indicators for people. Some I use because I really like them. I like this one, ICT Kill Zones by the Tradinator. I think is excellent. I also use this as well, especially if I'm trading index futures. So ES, NASDAQ bits and pieces, which is Index Sessions by Dr. Fuse, DOKTERFUSE. And you can catch this guy, really, really small contribution, got a cool Discord going. Again, no affiliation, but top guy, very much committed to sort of ICD methodology, which is something I studied quite a long time ago. But I like using the index session, so I find that really, really helpful. The other thing that I use without fail is my B Pro, right? So this is our in-house indicator, the Burbicator Pro. There'll be more information coming on this. If you're interested, it is available in the description in the link below. Same way that if you want to trade with me or you want to trade with us, then you can get access to the calls for free at the moment. We've got about, reviewed it on the weekly team meeting on Monday and yesterday, about 60, just under 69% win rate this month. Been a very, very profitable month so far. But yeah, do come and check us out. We're completely transparent with all of our trades, all of our statistics and bits and pieces. So if it's of interest, do let us know. So without going on too much, we can see the divergence was caught here by B Pro as well, meaning that when this candle closed, it gave us a little bit of extra momentum. Oh, not momentum, that's such a rubbish term, but it gave us extra belief that this is going to push down further. All right. So they're the principles. What are we now looking at, right? So we've obviously got this big order block here, right? We've had a big run beyond that. Right, we could say that this is the up move that led to this move lower, all right, and we would be right in saying that. However, we probably want to drill that down a little bit on the time frames, all right? You're welcome, buddy. And BC, if you were looking to use futures for trading, how conservative do you keep your leverage? So I'm thinking about doing a video on this. Leverage is kind of something people misunderstand a little bit, I think. So if you want to keep less money on an exchange, then you can keep less money, like whatever you want to keep on the exchange, and you can use leverage on that amount so that you're safe. You'll pay a margin for that. You'll pay a fee for borrowing that leverage. So be aware of what it is over time, the funding rate. But it allows you to minimize your exposure on the exchange, Also, we've got a little alert coming on lit, meaning we're getting our pullback, I think, at the moment. So we might take a little look at that in a bit and see if we get some trade setups. But so that's what you want to use your leverage for. Whatever your portfolio is, let's say you've got a $1,000 portfolio, right? Then for me, I never like to risk more than 2% of that on any trade, meaning that my risk needs to be 2%, right? So let me show you this very quickly because this is something everyone should be doing. You take your long position out. Let's just say we wait for this breakout here. Just for argument's sake, we're going to be long here, short here, and our target's here. All right. Now, this is going to be a relatively poor example because we're on such a high time frame, but I use a very good friend of mine and fellow Nest trader, Razoon. I use his position size manager, which allows me to just click on my entry, stop loss, target, right? And then we get this really cool little box down here, right? And it tells you that my risk per trade on $1,000 account for it to be 2% is $20. That means that if we get stopped out here, my risk is $20 plus fees, all right? What I really love about this is you can work out what your fees are. Your position size here is $82, yeah? And your estimated P&L is 57. So you need to work out what your fees are on that, normally around about 0.15%, yeah? So that would be next to nothing, a couple of bucks. However, if we drop down to a 1 minute chart and our position size increases astronomically, that some of these will be $82,000, for example, you need to make sure you're aware that on that, you're going to get that 0.15%. This is an average as well, guys. Varies from exchange to exchange. Also, if you hold native tokens, etc. But I've always found that using sort of 0.15% gives a kind of baseline for expectation on what your fees are. So whatever leverage you're using, however you're trading, just please make sure that your risk is no more than 2% of your account, and also be aware of fees, right? Because if I've got $20 in fees and my risk is $20, I don't just lose $20 losing the trade. I lose $40, right? Fees plus my stop loss, all right? And if you are interested in the position size calculator, you can come and grab us over at the Nest, and I'm sure Razoon will be happy to share it with you. So I'm going to turn the divergences off now, but you can see why I use these, right? So when we're in an established trend, to give you a very quick example, we ran these lows here, taken liquidity, come out, broken up above. Yeah, this gave us a really nice indication here. Now, on its own, we don't just want to enter based on divergences because we'd be taking all of these. But what if I said to you, you can have those divergences, combine them when we run a key level, and you say to yourself, okay, well, we just swept this liquidity. I'm now getting a daily divergence here. So what could I add to the mix to up my probability of this trade? Because we've had this big move down. We've got a clean target up above here, which we can see price eventually did reach. Yeah, a lot of this is a patience game. Well, then we can say to ourselves, well, let's look for our market structure, right? So we've got our low, comes up, sets this higher, higher low, higher, higher. So all we're doing is we're just simply looking for our break-in market structure. Yeah, let me just draw this back a second. Right, there's our raid. All right, price comes down, sets this higher, right? So we've come down, set a low, set a higher low. We've now broken that. We could either enter here. For those of you that know, I call this a breaker line, all right? You can call it whatever you want, just a term that I made up, right? Or ideally what we're looking for, and I'm not going to go into this in so much detail today, guys, but just for those that aren't aware, is we're looking for an inefficiency, right? Which, let me zoom in on that so you can see what our fair value gap, which is here, really, really skinny one, right? So make sure we've got that right. There we go. And then you're looking for price to draw down into this. I'm a big fan of using ICT's concept of premium and discount as well, right? So what I'm doing is I'm measuring the price leg up here. What I typically do is wait for the first down close candle, right? And then I'm measuring that. Then I set my fair value gap. If we then continue beyond that, I then wait for the next down close candle here and then mark that higher. And I'm looking for a retrace to the fair value gap. Why not this one? Because it's in premium and not discount, meaning that I'm waiting for price to retrace into here. Yeah, take our entries in here, stops below there. All right. So that's all I'm going to do on that piece, guys, because I do want to focus on some recency for you. And I appreciate that I've been waffling a little bit already. And poor old Danny boy's got to go in 5 minutes. So let's take a look at where we are. So we've got a bearish divergence, appearing here at the moment, which by itself isn't enough for us to action. This one down here, we were in this order block, remember, that we marked up. So actually price coming into here gave us a nice opportunity to see this taken out, see this broken above. And again, we get a nice retest of the breaker line here. We can then trade, first of all, to these highs, and then we've got our fair value gap target. So now we're here, we're kind of a little bit in no man's land, right? Because I either want to see a strong close above here, right? In which case, then I'm looking at these highs. Now, there's obviously a lot of them. On a daily basis, we've got these naked highs, right? But what we can see is since we filled the fair value gap, we've had this pullback, right? Now price is starting to make a move above here. If we get a nice daily close above this, yeah, then I would feel, okay, maybe we're using this area more as support now and we're looking to push up higher. However, typically we see these levels as an ideal opportunity for a bit of a retracement, normally back into a fair value gap like this, which we could look at on a lower time frame. Again, we can see here when we're in this established trend, BPRO catches the reversal after we take out these relative equal lows. And then what it's doing here on the way up is divergences are typically catching these corrective moves. So what you can use them for is say to yourself, corrective move, take out a prior swing low, right? See the break of structure here, continuation, right? No sweep on that one, but we got the sweep on this one. Broke above this high, retested it, yeah, continuation. Now we see here, we got this pullback, again, no sweep. And then we got this one here, which took out not only these lows, but this low here as well. Here's our high, here's our low. Break of this, yeah, retest, and we can then trade that up to the highs beyond it. So what we're looking for at the moment, and I'm just going to turn this off for a second, is we're saying to ourselves, okay, where are our higher time frame targets? Let's pop in target number one. I'm either looking for a untapped high or low, yeah. So what I mean by that is, for me, I'm a very simple creature, and when I'm looking at these, I'm looking for a swing high to be formed. It has to be obviously the center candle flanked by two lower highs. That's enough for me, or a swing low flanked by two higher lows. All right, so there's our low, higher low, higher low. Here's our high, lower high, lower high. Right, we send down there, set the lower high overall, the lower swing high. Price breaks below this level here, and we get continuation to the downside. All right. So, Dan, if I was looking at this, I'd be looking at two things today, mate. I would be looking at 15-minute and down. And what we can see when we look here is that London yesterday gave us a nice opportunity when we took out this full fill, yeah, left these relative equal highs here, yeah, which is liquidity. So you can either mark them up like this as liquidity, or you can mark them up as equal lows, right? Relative equal lows. And then we've got that here. We get this catch and we get this push above here, right? Now what we're looking for is we're saying, okay, if that liquidity has been taken, we want to see a break in structure. Yeah, we see this low taken out, comes up, lower higher, takes out this low, sets the lower low, return to this area. Once again, if we were looking to enter this on our principles here, we'd be using the fair value gaps that are in the green box, and then we'd be looking to trade it down. Again, we have these inefficiencies here, which are the draw on price, ultimately coming into the order block that's down here. Dan, you are more than welcome, mate. Catch over the stream. Yeah, no problem. Catch you on recording. Going to try and keep it to an hour, buddy. Have a great day. Hope the meeting goes well. Thanks for joining the stream. So these are the kind of trades that we're looking for, guys. All right. So I wasn't around to take this one. To be honest, yesterday, QNT isn't on my radar. I typically monitor the smaller set of assets, but one you guys might find interesting is if we take a little look at LIT. So this came from my good friend and fellow TBN team member, Pedma7. If you're not following him, then just get on that stuff. The guy's an absolute genius, one of the smartest people I've ever met. So here we can see we were running equal lows here. Yeah, let me drop the time frame down just a little bit for you. I ran our equal lows down here. Yeah, we get our purge during Asia. Now, if we drop this down onto the 5-minute time frame, what we can see is we've got price coming down. We break structure to the upside here, draw back down into this level, and that gave us the opportunity to go long. Now, I didn't get in on the longs because I don't trade before London. So for me now, I'm saying, okay, well, if we're looking at this on a daily scale, what we can see that was of interest up here is we've raided these daily levels, this daily high here and this daily high here. So my expectation is for a corrective move, okay? So let's take a look on here and say, okay, what can we look for here during London? Now, things are bullish at the moment, right? So you've got to be very careful, very cautious fading these moves, right? So what I mean by that is obviously we've had our higher time frame raid there, yes, and from a past level, we've now come up, we swept liquidity here, This is the low that led to the sweep of the high, which we can monitor there. Now, if we were looking for a very aggressive entry in here, what we'd be saying to ourselves is there's the sweep, here's the breakdown, there's the low, there's the lower high, right? So this is where we get our break of structure. Okay, and then what we'd be looking for here under the same principles of entry is saying, okay, well, if this is our leg down here, yeah, what I didn't like and what I don't like about this leg down is that we've kind of wicked below the market structure break, come back up, hasn't really shown a lot of strength. It's very often good to see displacement, right? So that's how ICT would talk about it, for example. So for me, I'm looking at it more as like an impulse move. You want to see a punchy move below, right? So if we were to look at the structure break here and then we look at this move, these two consecutive down candles here that really kind of punch below, then that would be more of interest to me. So if I was looking to take a move from high to low, I'd be looking to monitor that. I'd be looking for the fair value gap that sits in here. Okay, zoom in for you guys so we can see this nice and clearly. And what you'll see is we have just the smidgeniest smidgen of that, yeah, within our premium area, right? So I would adjust this so that it's just sat within premium, yeah, which is our green box. And then we draw this across and we say, right, well, here's our entries, stops above this high, and then we'd be looking for scalp shorts. Now, for me, I'm very concerned about this area here, but looking back at it this morning as I was reviewing this with Pedro, saying, okay, well, look, here's our fair value gap, right? This is what price was being drawn down towards. And we've got this, which is a key support resistance level, this red line. So for me, looking at this, when I got to the charts, I had a meeting first thing this morning. We'd had this move. There was a possibility. Obviously, there's always possibilities in the market to trade back to this inefficiency and trade it lower. But I just felt like the risk to reward wasn't there with this move. We're holding support here at the moment. So actually something I'm monitoring in this area is looking at what happens if, price finds support down here. We've obviously taken out any liquidity below these lows. This is the fill of our inefficiency here. So I would ideally like to see this purge a little bit lower. But then if we recover, right, again, what we're looking to do, set the low, the high, come up, break that structure to the upside, retest this area, yeah, for support. And then we can look for entries here, possibly on a break above this level here, right? So we've got confirmation of market structure. We've seen this hold as support, right? And then we've got some nice clear targets, obviously all the way up to here as we would look to trade that higher. So again, we're also talking about how that does and what that does to our risk and reward, all right? So we always want to make sure that we've got that on our side. So actually got through that okay. So let's have a look. Dan, thank you very much for that, mate. And thank you for everybody smashing up the likes. It really does help. Obviously, if this is helpful to anyone, then it's really good to share the love. And if not, then yeah, do let me know if there's anything different that you'd like to say. I mean, obviously, don't ask me to come on here and run a gaming station or something. Unfortunately, that's not my bag, but anything trading related, if it can be helpful. So, guys, if you're still on the stream, you've stuck with us this long. I know we've had some people suggest some coins, so we've covered QNT. Let's have a look at Euro USD, because I know Dean wanted to look at that as well. So let's take a look at that. But anyway, here for lit, that's my plan, is if we purge into this a bit lower, find some support, maybe we've got some orders here. Yeah. Then we look to build on that. We want market structure to rebuild and go higher. If we start really pumping from here, yeah, then we've taken liquidity from below those lows and we want to see a structure break hold, and then we look to trade it to the upside. So Euro USD, let's take a look at this beauty. Let's see what we've got going on. So, right, I actually did a mentoring session with someone on this asset recently, right? And actually it was back here that we were looking at revisiting these areas. Now, this pattern that I bang on about a lot, seeing a high taken and then the low, let me zoom in for you actually. You see this a lot closer on a 4 hour, right? But we're looking for a high to be swept or a low, but this is the bullish case, right? The bearish case, so we want a sweep of the highs and then the low, yeah, the origin of the move that sweeps the high to be closed below, yeah, we ideally then want to see a retest of this level before we sell off, right? Now, obviously, we can see we had a big impulse move here, but then this, for me, becomes of more interest. Because if we draw a box in here, what we're saying is that it was this move that led to the breakdown. That's the way that I see it, right? So I'm not going to cherry pick. We're going to draw it from that line to that line. Price revisits this area, finds resistance and breaks down, as we did here, yeah? So once again, we can see we get a high swept here. Yeah, this is the origin of the move here, right? So we set this high, price comes back down, sets this low, price comes back up into this area here, yeah? Then what we're doing is we're looking for this to break down, so we want our structure break. So we've got our high, low, lower high, yeah, lower low, but then we set this. We want to see the break of this. We label this up as our breaker line. We've now broken structure, closed below, retested, and then sold off down to the liquidity below these lows. So for me, I'm looking at the market and saying, okay, well, where are the key points that we've broken down? Where's the origin or the consolidation or the move, the breakdown move, yeah, that led to the sell-off? Or vice versa, you know, if you're looking down here and you look back historically with price action, you'd be saying to yourself, right, well, okay, what could cause price to reverse here? Yeah. Same way that we're looking back here and saying to ourselves, okay, here's the sweep, there's the close above. This section here then acts as a consolidation. If we mark the high of this, and let me just do it with a ray quickly so you guys can see. Yeah, so sweep of the low, there's the high, we get the break. So these highs here. If we're running this across, when price then re-interacts with these levels, you can often see them act as support, right? Because that's where the buyers were originally. So using the same methodology, this is what we're projecting across to here, right? So this is why at the moment, Euro USD, I've been thinking that we may get some kind of breakdown here, but we have to wait, right? It doesn't mean we can't take on lower time frame trades. You'll notice that I've got a range here that we've been looking to trade between this high and this low. But as it stands for me, when we came in here and we've taken out this key level, right? We're also in this breakdown area, yeah? Or I used to call it a breaker box, but people use breakers for a lot of different terms now, so it got quite confusing. Then we're just looking for the same kind of principle, right? We want to see a high taken out. Now, remember, we're looking at this on the daily scale, guys, so we obviously want to be respectful to the scale and the time frame that we're looking on, right? So we're looking for highs to be taken out. This high got taken out here, but we didn't close below the low, right? Then we're looking at this high, which has now been taken out here. So if we're imagining that this is our sweep, right? Price comes up, sweeps this. Well, if we're trading this on a daily scale, we would want to see the origin of the move, yeah, which is this here. We would want to see price come down, right, and break down in this area, yeah. Now, on a daily scale, if we were trading it, we'd actually want to see a little bit more than that. We'd need to see price close below this area, pull back towards it, and then we'd be looking to trade it down to these lows here, right? Now, obviously, being aware that we've had a sweep down here, right, a close above the high that took the low, yeah? So we could be coming in here. We've got this bullish momentum here coming into this. The reason we would favor this one is because historically we can see that this, like a good order block, has already acted as resistance. So we found this. This is the breakdown. Prices revisited. Still enough selling power in there to send the market lower. We've now come up and we've come a lot higher into this move, right? So we want to be aware of that. But what we've also done that gives the move weight is we've taken out this key high time frame level. If we now break this and come back down below this level, my probability switches to looking for shorts. Okay, now to pop this into a lower time frame, we've had this drawn out as a range, right? It's given us a few nice trades. So the range is formed once we get a clear high, right, which is this. Clear high, clear low. We've had this impulse move. We've had this impulse run up, right, which sets this. Originally, it was on this one when we drew it. The price came up, took that out, right? Now we're looking for price to break down, which it does, and set a clean low. Now we can take our range from the high down to the low, right? And then we're saying to ourselves, okay, well, what future opportunities does that give us, right? So what it certainly tells me is any time that we get these deviations, yeah, or we get any interaction at all with these key levels, we would monitor it on the low time frame, yeah. And actually, let's drag this across to make sure this is still fully relevant, or not relevant, but it's current. Sorry, yeah. So again, the yellow box represents our higher time frame breakdown area, right? So there's an expectation that price could consolidate in here anyway. So it allows us to step in and get our range drawn. Yeah. So this very, very simple range. And all we're looking to do here is when we interact with any of the extremities. Yeah. So our red boxes, we just want to make sure, for me anyway, personally, I like to be within the London and New York trading sessions, right? So as we can see here, this one caught us out a little bit early, but again, not something that you have to stick to your trading. It's just typically what I do. I like to see how Asia develops, and then London. You can quite often see London or Asia. London set the high or low of the day, and you can also quite often see Asia's range once that's developed. Highs and lows of that get taken out, which gives us a bit of extra confluence. So we missed out on this one. Not a problem. We don't want to trade the mid range on this just because the range is a bit tight, but we get a lovely setup here in London. Yeah, so we come into our key area, take out equal highs here, break down, trade. First of all, obviously we do this enter on the lower time frame. Steve Etienne, hey buddy, good to see you. And then when we break down, we look to trade it to the liquidity on the far side of the range, but we're always aware of the midline when we're range trading, guys. All right, so keeping that in mind, I won't waffle on and bore you too much with the details of that, but keeping that in mind, what we're looking at here, let me just pop to the 15 minutes so you guys can see it a bit clearer, is that price has come up. This is our daily level, right? So that's what we've looked to be swept. Price has come back down below this level. It's now retested it, broken down. Now, again, a lot of people say to me, very, very often people say to me, do you know what though? But I see these sweeps and I'm just getting chopped to pieces. The truth is, sometimes you just have to wear it, you know? Like, say, for example, you get chopped up here because you're in too early here. Fine, you need to review it and ask yourself why you entered there. Maybe it's because you didn't allow for the sweep of this level and then a breakdown, or maybe it's because your targets weren't realistic. So if I was looking for a breakdown here, yeah, which I was, yeah, but I didn't actually get the entry, then I want to see this down, but I know that these relative equal lows here, there's potential for the price to reverse there. So I'm not just going to blindly hold for the midline. Yeah, I want to make sure that I understand it. So let's say, for example, we took the breakdown of this low here. We took the retrace in the fair value gap, which got us into the trade here. Sorry, 1 second, which would have got us into the trade here. Our risk is above the swing higher, and we know that our target are these relative equal lows. Yeah. So you know immediately when you're looking at this and you're saying to yourself, okay, well, what have I got here? You know that you've got a 1.5R trade. That's your risk. Yeah. Now, I like to take profit and get out and flip my stops quickly. Sometimes I get stopped out. Now, for example, this one, you could say, okay, but you got stopped out here and then the trade does something like this, right? That's not a problem though, because if my theory is still the same, then this breakdown up here, right, where these highs have been taken out and we've lost this low, yeah, then we would be looking to trade that to the downside. All right. And then you're saying to yourself, okay, well, you're getting multiple opportunities. Again, we've got a system that's been triggered here within the London kill zone, right? I personally will be looking for a bit of a retracement into here. Let me clear this up, actually. I personally would be looking for a bit of a retracement into here, into this fair value gap. Yeah. If we get that, and then we get price breakdown, ideally a little liquidity sweep, then I'd be a lot more confident of trading it, first of all, into these lows, then into the range mid, and then ultimately to the range low. All right. So that would be my thought at the moment on Euro USD. So I hope that has covered that one, mate. Let's take a quick look. What do we got? So gold looks like the bull trend continues. Yeah, so Bast put out a really good trade on gold recently, and It's been absolutely smashing that. So let's take a look at that, and then we'll take a quick look at near as well, shall we? So here we go. So funny enough, actually, you can see a trade on here where I've not cleaned these charts up fully. I don't know how this one little bit has has survived when obviously the rest of the chart's been cleaned. But similar principle, right? We were looking for the breakout here above this high. We didn't get the retrace here. However, it remains a key point of interest here because we still have our fair value gap. Right, which literally just starts here. See, that's just down there. So we have a really skinny target here. Normally, it's not so much that. Obviously, the fair value gap goes from there to there, but this is our measured leg higher. We need this to be in the red, right? Because that gives us, better probability, or not probability. It gives us a better risk to reward. And we would have got tagged in here. Now, I didn't set any limit orders here, and I'll tell you for why. I don't often like these traveling into the next day. I like to see the setup happen again. But what we can see happened here is if we tagged ourselves in here, our risk realistically had to be below these lows. And to be safe, we're talking about having this up here. Now, for me, I'd have to leave this open all overnight. There's every chance the price comes in. I don't like the price action I see. It doesn't give me a chance to manage the trade. But we can see here, as long as we stick to our principles, which is we have our liquidity sweep here. Yeah. We come into this area here where we've taken out some lows, closed above the highs. Again, we can see a consolidation move here before a decent impulse move higher. Then all of a sudden it starts to line up and you say to yourself, okay, there's a reason that maybe we found some support down here. And in doing so, we've been able to clear out the liquidity below here, ready to fuel a move higher. All right. So with gold, and if we look at this on the higher time frame, and absolutely, Nick, we will we'll take a look at natural gas. I don't actually trade natural gas. So let me know the handle that you want me to take a look at for commodities, and I'll make sure we are on the same page, my friend. So gold, we can see here, obviously had this area here we were monitoring, acted resistance, flipped, didn't quite get the retest for support, which would have been really nice if we got that in here before it moves higher. Now, in terms of targets, we've got this inefficiency in here that's now been filled. We've got one a little bit above it. Actually, let me just zoom in up here for you. We've got this inefficiency in here. And obviously, we've got liquidity resting above that high there. So for me, I think that becomes a realistic target now. We've taken out any real kind of key targets we could have before that. There's always a chance. Let's just mark that up as our daily level. Yeah, there is always a chance, right, that you've got the order blocks here from the move. Something I would be cautious of is looking at our principle we were talking about before, which is our area of breakdown or our area of breakout, right? Here's the low that swept the high. See, we get a perfect retest of this breaker line again, right? Again, adding validity into the orders that exist in here. This can be a really good, clean way in terms of whether you're looking at order block theory, bits and pieces like that, to kind of take a look at that and say, okay, well, look, we get this breakdown, and I'll show you again in a second, but we'll just project this box across here, which is orange. Oh, just managed to change the border. 1 second. There we go. So we're in here getting our breakdown. Remember what we said before? In terms of that, I like to see the 50% level hold here. Which is holding up at the moment. So again, if we start to get this breakdown here, something like price breaking down here, we've taken out these highs, right? We've come into this consolidation, and then I'd be looking for price to do something like this, get back below, and then trade that lower, right? Now, I'm not saying that this is going to break down, but it's there's always that possibility, right? And as traders, we don't work in certainties, and anybody you hear talking in certainties, you can always be pretty assured that they're not doing this professionally, right? So if we want to see this as showing strength, then realistically we want to we want to overtake this area. We want to start by getting some solid closes above the 50%, reclaim this, and then ideally, the problem that I've got with this trade being long, right, is that we've got, and this looks so messy, right, but when we look at this here, we've got this daily level, which could easily act as a rejection. Yeah. So in fact, I think what I'd be doing to trade this, I'd be looking on the lower time frames. Yeah. And I'd be waiting for a reasonable close above this level. Yeah. Then for price to do something like this, get a little purge lower, come up, reclaim that high that took the low. Yeah. Again, on a lower time frame for this one, because our target is going to be this daily level, which is very close to here. So you have to be careful in managing your risk with that trade. All right. So let's have a look at some gas. By the way, I hope that answers your question, guys, on gold. So let's have a look on natural gas. And we'll also take a look at NASDAQ as well. We've got the NASDAQ up here. That is something that I look at and I do trade. Let's just have a look. I think, what is it? Is it NG, natural gas, I think? Yeah, NG. Is it NMX, the trade one? No, what is it? Let's have a look at. We don't want partners. We do want futures, gas futures. There we go. Right, so let's have a look. This, I don't know if this doesn't really feel right for natural gas. I mean, it must be, but that I've seen natural gas move that low. To be honest, the price should be really, really high. Let's have a look. Hang on. See if we actually get a ticker come up on here. Natural gas futures, currency. There's the CFD on currency.com. So let's try that one. And that gas spot, there we go. That'll be on Pepperstone, won't it? Yeah, so wow, maybe I should be trading this. They all seem to be heavily aligned here. So I don't know if this is the same thing that you're seeing on here as well, Nick, but don't do a lot of commodity trading, if any, actually, anymore. I used to, but wow, that is a horrific drop back, isn't it? Yeah, I agree with you completely. You can see exactly why people are talking about being ripped off a month of Sundays on this one. Wow. Okay, so with these kind of historical levels, I like looking at the monthly as well, right? So I would have been very aware of this level here, and I still will be. Make that a bit thicker because that's going to be a monthly level. Yeah, wow. I mean, basically, this thing is just dropping, isn't it? But what's beautiful about this chart is that one thing we can see here is when we get this structure shift here, yeah, I'll do that in black. Ooh. Yeah, when we get that structure shift there, notice how price comes back to rebalance this inefficiency. Yeah, almost to the dollar. I'll do that a bit darker for you guys. Can you see that? So we have the breakdown. Yeah, if we were looking at that as I was showing you the trades, yeah, if this is our leg that breaks market structure down here, we'd be looking at this here. It comes right into our green box here, which is our premium section, which is where we'd be looking to go short. And we get that confirmation of the breakdown here. So that's really, really interesting. So now if we drop this onto a weekly, yeah, get rid of this for a second, you know where that box is. We can see how price runs into this inefficiency, rebalances, and then starts to sell off lower. Now, I would be expecting some kind of reaction at this level. And the one that we got is absolutely tiny here. So there's obviously a lot pressuring this market down lower. Now, I would be concerned that this is a deviation. I think if we look back along this line as well, I think if we were looking for some kind of support and resistance line, what we'd be looking for is what the market's done here, right? So the market's come in, it's opened, it's sold off. Where's the first price it finds resistance is here. So let's just do that and let's make this dark green. Yeah. Why don't they dark green? There we go. Right. So resistance, 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 deviation, sells off lower. Where to take out the ultimate lows back here. So now we revisit it. We don't hit it exactly, but we just get a bit of a pullback here. Now, when price comes through on a weekly level, we get this strong bullish candle here, a retest, and then price flies away. So I'm quite surprised that this has offered very little in terms of support. Now, where else could we be looking for here? Well, we stick to our same principles, right? What are we looking for? So we're looking for what we would call, this liquidity sweep. So we see this high. This key high over here is swept. Just doing these in slightly thicker lines, guys. I hope you can see them okay. So that gets swept above, then this gets closed below, right? So that is saying that there's maybe some bearish momentum on the go there. However, we can see that very shortly afterwards, actually, that this is the sweep of the low, yeah? So when we see this breakout higher, and it wouldn't have done us any favors at the time on a weekly scale, but this sweep of the low here was actually caused by this high. So price takes out the low, closes above this high, holds this area, our consolidation, before it then moves higher. So if we project this across, this would definitely be an area of interest for me. And maybe an area that gas will find some kind of support, right? But I think when we look at this on a weekly scale, we've closed below this here, this key SR level that we've just drawn in, and we've actually retested it to the dollar. So this is a tricky one here. I think we either deviate here. I think if we see this as a deviation, if it gets back above, yeah? So if it deviates, gets back above, holds in here, then I'd be looking for something like this. Yeah? So again, the high that sweeps the low to come back above, retest this level, and then we trade it up. We got a volume in terrible line. We've got a volume imbalance in here, right? That would be our first kind of natural target, obviously on a weekly scale. Now, if we're looking at this, God, I'm really going to have to get rid of those, aren't I? Hang on. So if we're looking at this here on a daily scale, we can see even closer when we're looking at this key SR level and then the fact that we've taken this out. There really wasn't much of a reaction here. Now, we can see when we took out this low, right? So this was our weekly level. This is the kind of thing that you'd want to see, right? You'd want to see price purge lower, come up, set a higher low. This gives us our structure shift here, right? So we've had the sweep, got the higher low. Now we've got the higher high, right? Then what we'd be doing is looking for trades in here to fill this inefficiency here and ultimately come up to take out this swing higher being drawn up by this high time frame fair value gap, yeah? Now what we can see is with this drop is we've actually left a lot of inefficiencies in here as well. Now price can continue to tumble like this, but very often it wants to rebalance, right? Because the market wants to be a reflection of balance, right? You want orders to be going both ways. You want, market makers need to make balanced markets in order for people to trade them, right? Whether you believe it's manipulation, human psychology, big players moving the markets around, that kind of narrative is yours to fit that you like. But when we look at the price action is our, is our blueprint for this, right? So when we see these big moves, yeah, impulse move down, we often get a corrective move, yeah, targeting either an inefficiency, normally on a higher time frame as well, fair value gap, sometimes a breaker, right? So for example, if we were looking, in fact, I won't go into breaks on this. I'll do another video on it, right? I don't want to we got a few minutes before the end. I'm sure some people might want to see another chart. I think FTM burned, sorry. I promise you, then I'll be taking a look at NASDAQ. So, Nick, that was a really good that was a really, really good suggestion. That I'm going to keep my eye on that, right? Because for me, when I see these big moves down, I'm not thinking continuation, maybe to here. I'm thinking relief rally, yeah. And something else you can do as well, guys. Don't forget to use your fibs, right? Use this last move as an example. Look at this. Perfect. 0.66, 618, 705. That's the area that I'm looking for, the cluster that I'm looking for price to retrace. Because why? We're bearish. Yeah. We've had this corrective move. Price has come down. We've had this drop, taken out these lows. Yeah. So we've had a market structure shift. I'm looking for price to come back and set a lower high. And this is very often the area that it will do so. All right. So if we apply the same knowledge here, not the same knowledge, but the same principle, and let's say that this is our low, we start to correct from here, then all of a sudden we can start hunting in this area and say, okay, well, remembering our premium and discount concepts, if this is the top of our move down, this is the low. Now, obviously, remember that we're saying this is the low. I'm not saying it actually is. We're just assuming, if it did turn out like this, then we're in our green area. This is where we're looking for our short setups, and then we're looking for our inefficiencies in this area. So this particular one here is pretty tasty. We've also got this inefficiency in here. Yeah, and the fact that this one here is sat in quite nicely, all right, with our golden pocket or golden zone, then I'd be looking for a retrace towards this. Then if it started to break down again, yeah, so if we get something like this, normally I think what we'll do is see something like this, little purge lower. If we then break structure to the upside, well, brilliant. I've got this target, lovely clean target here for any longs, yeah. Scalp longs into that level. Then when we get up here, yeah, you want to see this interacted with, again, a little sweep, a breakdown of the lows, and then the likelihood is that we come back down to retest these levels down here. All right. That's what I'd be looking at on natural gas. Obviously, this thing could just continue to absolutely plummet. But I think that's what we're looking for. And Bernd is saying here, yeah, big US export terminal is starting up again regarding gas. This, unless demand drop price a lot. Yeah, it makes sense, right? When you look at it from that kind of standpoint as well, the reliance on gas, some parts in Europe are starting to kind of, we have the reserves apparently for this. What's going on now? It's next year that we're worrying about, because buying for the future has been the big problem while prices have been so heavily elevated. The US, I believe, is still the biggest or one of the biggest producers of natural gas. It certainly is for oil. So, yeah, it's going to get tricky. Seems like there's a cold winter due in here in Europe. So, I think still quite expensive to buy it over here. But it's very interesting to look at the dynamic globally. And then, Nick, you're very welcome, mate, anytime. Let's have a look at NASDAQ for Bernd, yeah? Should we take close off on NASDAQ, guys? Take a look at this. And what I like about this is it really kind of comes back and fits in with our crypto narrative as well. Here we go. Right, so NASDAQ. Oh, God, I've been doing loads of testing on this chart, haven't I? Bear with me a second, please, guys. Let me just get rid of these verts, which, incidentally, I think on this one are just representative of low time frame structure shifts, right? Create a group. Boom, there we go. Right, so a little bit messy, the chart, right? But I'll clean that up as we go through it. What you can actually see on this is my weekly and daily levels, right? So really simply for me, our highest likelihood chance, and actually one thing I let myself down on here, is making sure that this is, normally my OCD means that these are thicker lines, the weekly than the daily, but that's fine. That is fine. So the concept of this, and I think it's a good thing to run through very quickly, is just looking at these key levels. So why these levels and why not other levels? Well, let's look at them. Swing low. Why? Because it's flanked by two higher lows. Swing high because it's flanked by two lower highs. Yeah. And all we're doing is marking every single one of them. Yeah. We traded within this section between weekly levels. This was a weekly level back here. We see we had this nice reaction. Yeah. This weekly level, we had this swing high here. We can see we got this reaction down. However, it was also our break of market structure. So we always want to be cautious with those, right? Once again, what we're saying to ourselves here, and we would look at this on a lower time frame, but this is the origin of the move up. This is the structure break. We can see we're back down here in discount. Yeah. So that gives us higher probability setups. And we can see how beautifully we hit that golden pocket. Yeah. So impulse move up, breaking market structure, retrace into golden pocket, swept these lows, right? These daily lows. And then we had this lovely move. Where to? To the liquidity resting above this weekly and daily set of highs. Yeah. We interact with those here. So this isn't one line. This is actually a separate line, right? Make that thicker for you. We can see that when we took out that with that candle, yeah, then we come back down, we have this beautiful kind of shooting star candle here, right? Or like a bearish pin bar. That's a really nice indication that price is going to seek liquidity lower. So on the lower time frames, we would look to trade that down into those levels. And you can see it on all of them. Look, big strong play through that daily level, no problem. Didn't give us the chance, right? But once again, higher, here we have our low, higher low. This was also a break of market structure. So we want to be cautious on that. Yeah. Now this one, as we come back down here, high, this was just setting the low. Yeah. So at this point, we hadn't set the lower high. So this one here, we have a higher probability of seeing a reaction to the upside. Now, where does that leave us at the moment? Well, again, look how price was drawn up into this inefficiency to rebalance. Let me just draw that across for you guys so you can see it. Yeah, I'm going to delete this after you can see here, rebalance, lovely, draws back down, and then we get a small correction and price moves higher. Now, my feeling is that if we look at the drop here, this impulse move down, something I'm interested in here is looking at orders that have come in this area, right? Now, I want to drop down to a 4 hour quickly as well. And we can refine this even more so on a 1 hour. Because what I really want to see here, right, is this. Now, we've had this big sweep of the weekly level, if you guys can see that, right? Taking out that weekly liquidity. That's a strong move. Bang, straight back down. Now, what we're looking at here is price comes down. This was obviously our FBG. Get rid of that. Sets the low, high, chops around here for a little bit, right? But then what we get, and what we've discussed before, is this kind of the origin of this breakdown. Now, a lot of people say to you, yeah, but you're looking back on charts, you already know this thing's broken down. Fine, completely agree with them. A lot easier to do this than it is to do this live, right? However, I don't need, or I'm not showing this chart in terms of, oh, look, I saw this and caught this move. We want to see what this is doing further up here, right? So when we look at this, again, we can see again what brings extra validity to this if this becomes our breaker line. Yeah, I won't obviously label them all up as that. I'm not trying to pump my own terminology here. Right? And then we go up, take out the higher, close below the low that sweeps the high, and then this candle gets a lovely retest of this area before a big sell-off, right? So, fine, this isn't what we're looking at, right? What we're looking at is, does this here have any relevance to what's going on at the moment? Can this help us with anything? We're just drawing this across. And there we go. So we can see here the price has come down, it's had this interaction, right, with this level. Now, what we want to be careful of here is we don't want to cherry pick stuff, right? I don't trade on the hourly chart, right? But this key swing high here will almost certainly also be a swing high on the lower time frames. I don't execute on anything really above a 15 minute. My chosen time frame is a 5 minute, right? So again, also as well, I didn't take this sweep because I was in bed, right? It's early hours of last night. But if I was looking to take this, and again, I'm not saying all strategy should be based around kill zones and that, guys. I just find it helps me kind of view the market and then helps me keep my frame of mind for that as well. But what we're looking for here is the same, right? We're looking for a purge, highs to be taken out, which are done here. All these lovely equal highs. Swept, yeah. And then this would have been a tricky one to enter anyway, purely because this was such a heavy pump and this was such a big dump. But this would be the origin of your move. It does almost tag our breaker line there, doesn't it? But not quite. But you can see this, right? So sweep, break below the low that sweeps the higher. Yeah. And then we're looking for a retest of that, which we almost got here, but I think we were actually a few bucks short. But you can see the principle, right? We come back to that same area, right? We're just decanting down on lower time frames. We're looking once again for our sweep. Low that sweeps the high. Break a line. And then we sell off, right? And obviously we would then be looking left. The reason we would expect probably a bit of a deeper corrective move or a deeper drop from this is because of this action here, right? Very, very thin, inefficiencies here. Then maybe we've got this situation here, right? Where once again, we can monitor this area. There's some lows that have been swept. Here's the high that sweeps those lows, right? Bang, big, powerful move up from here. So we say, okay, there are obviously a decent amount of orders in there. We can draw our box, our breaker box. Or don't call it a breaker box, actually. I need to stop calling it that. Just because there's some really good teachers out there that teach breakers, right, which are actually is like a candle pattern. So for me, it was just an idea that that it was your break of either structure or that it was the breakout area, right, meaning that it's an area we should pay attention to. So I'd be looking for this to come a bit deeper into here, to be honest. And maybe, we could have caught a nice one here in London, looking at it in hindsight. But yeah, I had other commitments than that this morning. Also, I wanted to prepare some bits and pieces for you guys for the live stream, and try and keep it to an hour, which I've already waffled over by about 6 minutes, right? So just one more question we're going to take, and then we're going to wrap this one up, all right, guys? But thank you very much to everyone that stayed on the stream. See, 40 of you soldiers are still on here with me. Really do appreciate it. Let's just take a quick look at lit. Steve's come up with a really interesting question here. Would you view Litecoin, lit USDC, to be on a breaker line now? So let's have a look. I don't know why I didn't click on that. Hang on. There we go. What time frame are you looking on, buddy? If I was looking on this, on the daily, fine, we can see we've had this sweep of this level here, which we discussed earlier. It still seems to be showing quite a lot of strength. What I like about this move at the moment, actually, is this. So I'd be thinking here, right? These were our equal lows. So this was a beautiful area to sweep. Yeah. 5 minutes. Yeah, no problem, mate. I'll take a look at that for you right now. So that's the area that was swept. This actually becomes our breaker line, which we can see we're retesting now for a potential push a little bit higher. Obviously, if we're saying we've now taken out those liquidities there, then, we can look higher. And again, it's Pedro who alerted me to this and kind of said, it's looking strong at the moment. That genius has been in from miles back, right? But for me, looking for it in terms of a day trade rather than a position, I like this, right? We got the dip into the fair value gap. We're holding this level of support. But to answer your question, if we were looking on an M5, then we had this sweep up here, this morning. This is where we had our break. This is where we were looking for our entries down here, right? Now, if we're here, don't worry, Stevie boy. We can take a very quick look at FTM. Just let me know if you've got time to hang on for 5 minutes and we'll take a look. No problem. So this is what we labelled up, right? This was the liquidity resting below here. We've had the purge into this. So if we were looking at this on a 5 minute scale, you could say that we've run these lows. Yeah. This is the high that took the low. Which will become our breaker line. And then we'd be looking for the retest, which we'd have here, and then we would look for price to come up. I'd be cautious of these equal highs here, But then ultimately we're saying, okay, well, look, this is the consolidation, right? Remember? Here's the sweep, That's the sweep that took that out. So we look for price to draw back to this area. So for me, I'd be cautious with this one at the moment, considering that we've got this breakdown. One other thing that I would be looking at, which is always worth monitoring, is the DXY. Right, looking for strength on here. Yeah, no problem, Steve. We'll take a look at that in 2 seconds, my friend, and we'll do a quick one. So for me, I've been saying for ages, I know I sound like a broken record, that I think this coming down to take out this. We did get the breakdown. Made me look a bit foolish here because I said as soon as we broke and held below that, don't like the fact we've held below this for a second time. But we did get the sweep in the end. It wasn't the reversal, and then price continued to break down. Obviously, this is an inversely correlated asset to Bitcoin most of the time. So when we're seeing weakness in this, we're typically seeing strength in Bitcoin. And obviously, one thing that you can do is you can overlay straight into here. And then what you want to do is just draw this down, which is not letting me do for some reason. But what you would look at here is get it into a point like this. It's not letting me do it today for some reason. But basically what you can see here is as Bitcoin's going down here, we can see that the dollar is going up, right? Now, as we look here, again, not always perfect because we had this fall here, in which case Bitcoin was kind of crawling along really. But at this point here, when we really broke down, let me just get rid of that. At that point, when we really broke down, that's when we really started to see the improvement in Bitcoin, right? Really started to see that pump. We kind of took out this key level, and then risk on season kind of came a little bit more into the fore. So at the moment, I think we're going to find some support here. Yeah, maybe we dip below this and then have a run up here. We're within a monthly order block at the moment. And we've been sitting on that for a while, actually. So let me delete that. We're below January 2017's high, which I'd really love to see us reclaim if we want to be bullish on the dollar again. But obviously, that wouldn't be great for risk assets. LJ, hey, buddy. Thanks for joining the stream. If you haven't caught it, mate, it will be available on recording. We're just going to take a quick look at FTM before we call it a day. So where is my FTM chart? Here we go. Man, that's had a lovely run today, hasn't it? Oh, well, at least this held up well. So you always held to your thoughts when you do these charts, because as we can see here, this is just a real simple point to point. What I really liked about this is how clean it was. Yeah. We also drew up this fair value gap here. This is a slightly lower time frame one. When we took out these lows, we can see here, price, came back down to take a bit more liquidity from here, but then ultimately took out these highs and then had a lovely pump into this fair value gap, rebalanced this, sold off again, right? Again, this fair value gap, this inefficiency here started to draw price up. But in terms of support resistance, close above, retest, bullish engulfing candle, gave us a great opportunity to be going long on this, right? So that's no interest to us though, because anyone can do that with a chart, right? Looking back on it, we want to see what's happening now. So we've just taken out this key level here, which is a daily level and is obviously of interest to us. So this is a key area. We start holding above this, then I think we can safely say that we're looking at this high here and then ultimately this high here. The other thing obviously we want to look at, never forgetting ourselves here, is that's our sweep of liquidity on the highs. Yeah. This really is the low that sweeps the higher. We can see if we were trading this, we would get the close below, the retest, and the sell-off. So let's project our box across. And say to ourselves, okay, well, shows a lot of strength in here. Yeah, we can see we probably had a similar move, consolidation in here, which price overtook and then retested. So I think to be bullish on this from here, and it is showing strength, but I think the shrewd thing to do would be to wait for a strong close above here, a retest of this area. Then on the lower time frames, you'll probably see something a little bit like this. Right? And then this would be your opportunity to get in here. Same principle, right? We see our sweep of these lows. Yeah, break above the high that swept the low, and we can look for entries here. We've got our high side targets up here, right? However, if we were to see the opposite here, I think in terms of breaking down, I think we would want to see probably price spike up in a similar way here to just take some liquidity before it kind of breaks down here. And then I think we want to see this. We want to see a low taken, yeah, so that we get that low taken. Then we want to see a retest of that. All right, so basic market structure here. You want to just be seeing breakdowns. You can then look for inefficiencies in these breakdown areas. In an ideal world, you get a sweep, right? And then you're looking to enter on the break of that low. All right. Again, these will look big here because they're on a daily scale. I'm not suggesting doing it on a daily scale. I'd be looking to enter those 15-minute and below, all right, without a shadow of a doubt. But we can see after this beautiful breakout, we've now just recently taken out those highs over here. So I think FTM, for me, feels like it's at quite a pivotal point, which actually is similar feeling for me across most of crypto. Yeah, is that we've had this strength now. I think this is the time to be a little bit cautious, taking out a key daily level. Really simply, if we have strong close above this, I think we can look for upside targets as long as the DXY plays along, or the strength for risk. And I think we can also do the opposite if we see a breakdown in here. You know, we've just filled this inefficiency, right? This was our fair value gap here and here. That's been filled to the T. We also have this one lower down, which can act as a draw on price. And obviously, if we've run out the liquidity of the highs, then we're looking for liquidity lower down, right? And this then becomes our draw on liquidity down here. Right? Via this fair value gap. All right, guys. So, look, I hope that's been interesting for you. I know I've waffled on for about 15 minutes longer than I said that I would, but I did want to cover a few requests for you guys on the stream. I had so many of you on here today. It's just been an absolute blessing. Uriel, thank you so much. LJ, Steve Etienne, Craig Parker, Nip Harburned. I mean, all of you legends that have come on today. Gold Max, I know you were on there, so I'm really, really sorry if we didn't get around to looking at your chart, buddy. I absolutely prioritise that one for next week. QPs, thank you for the good suggestion on there. Dan P, who I know is not online at the moment, but a big shout out to you. Yakuza Kana, brilliant name as well. Sorin, Dan again, Queenie, Leanne, Queen, Sorin, everybody else that was in the thing. I'm really, really sorry. Frank, Ken, if I've missed any of you guys out, Trader Z8, Victor. It's lovely, lovely, lovely to have you guys. Seeing so many familiar faces on there as well. Do let me know, guys, if you've got anything that's of interest. And you can come and trade with me as well if you're interested to come and trade over at Bybit. You get access to our official calls as a team. You get access to a really amazing community. You can find the links for that in the description below, as well as free trials and bits and pieces like that as well. But obviously, do come and find me on Twitter. You can interact with me there. And come and grab us over at the Nest. Try it. There's free trials. There's other ways that you can get in. I always recommend being part of a really good trading community, whether it's us, someone else. Just really make sure you do your research. Make sure you're somewhere where people are really taking the time with you, taking the time to teach you properly, taking the time to engage with you properly, and have your plans in their heart. What I love about the community I'm part of is that the traders are all people. We've come from really diverse backgrounds, and we're living proof that you can take these dreams on, work hard, and that you can achieve them. And that's something that we want to share with people. So do come and check us out. These free, and yeah, just have an absolutely brilliant week, guys. I'm going to be in and around, try and be a bit more active on Twitter this week as well. So keep an eye out for anything. And obviously do come and drop in any questions and that, and it will be always be cool to see how you guys are getting on. I'm back again Monday and back again Wednesday. So I hope to catch you guys on the stream. Have an absolutely blessed week. Loads of love from BC. Take care of yourselves, and I'll see you guys next week.